RJTI charts versus banks, second wave lower for indexes. Unless President Trump reverses his tariff attacks, you might as well brace yourself for the next wave lower. And it appears that's exactly what's going to happen based on our algorithm's interpretation that he will not reverse his tariff attacks at this time. So we will hold on to our second lower bias looking for downside targets, SP 500, 4,000 to 4,400, DJ 30, 29,000 to 34,000, NDX 13,000 to 15,000. If we're wrong and Trump does reverse, then we've already made history, for nothing can change the fact that this is the sixth time we've called the top for a major stock market decline 3 to 10 months before it unfolded. We see the VIX working to trade even higher than our targets projected on September 24, 2024 to retest its August 5th, 2024 high. And as you can see on the chart is where we put out that the VIX would retest. You can see the August high in 2024, which is on the left, and you can see what the VIX did after our forecast here in year 2025. Now, we expect our 9, 13, 24 levels to be challenged. These were other levels that we saw the VIX moving to, and you can see on this chart here, we've got targets of 68.35, 80.97, 95.61. We think that the VIX is going to climb higher. We expect more stocks to get hit hard, and yes, this includes the Magnificent 7 tech stocks. Listen, we're not picking on anyone, but are you happy that Jim Cramer, Dan Ives, Kathy Woods, Thomas Lee, and many more told you to buy between November 2024 to January 2025? Tesla, Apple, PLTR, Lulu, Meta, etc.? It's a fact we told to sell or to use rallies to take some profits off of the table. On September the 23rd, 2024 at 3:35 p.m. Central Daylight Time, we sent out, the only thing is when things are to unfold and year 2025 offers the beginning of a major decline. I'm showing you now, and yet most don't even know that they should be using this rally as a means of profit taking versus adding on new positions. Nope, Zacks or Motley Fool or Inside Monkey nor Jim Cramer is seeing what we see. Neither is Goldman Sachs, JP Morgan, Bill Ackman, Kevin O'Leary, Kathy Woods, Tom Lee, BlackRock, Vanguard or Fidelity, Schwab or Loop Capital, etc. Not any bull who is telling you to buy understands that a down is coming and offers a severe downturn variation. So what you should get out of this is that it is possible for us to potentially see what is coming around the corner before most. And maybe one should give us some credence as to what we're saying. What are we saying? Only President Trump's walk back on tariffs will avoid a second wave for a little bit. And any rally is to dissipate because the laws of physics and mathematics are still extremely present that is calling for a second wave down. We see that the banking sector is to suffer more as we've projected from the past, and it is a 93% probability on our behalf that either 1 to 2 global banks find more trouble, or at least 4 to 17 regional banks are to suffer. But in all honesty, this is a very underweight number for the regional banks. Here's targets that risk come into play. They're based off of the colored lines. When you look at global banks here, The targets are 460.98, 408.99, 369.30. For the regional banks, they are 34.89, 30.91, 25.67. This does not bode well for equities with the banks seeing these levels here. Lastly, we've indicated for the last 6 to 9 months that a black swan is embedded in the markets. And the only thing we haven't concluded is if the random tariff enactments qualifies as such. If so, then does this qualify as the one, or is there another black swan underpin for the market? We're going to lean on the latter, that one is underpinned. The laws of physics and mathematics must be recognized as the superiority of all things that move. And the markets are based on action, and therefore must conform to the superiority of physics commandments. Fundamental analysis is great, yet it is a 50-50 summation. Take, for example, 4725. It is reported that President Trump is to pause tariffs for 90 days, and the market exploded higher, only to find out that such reporting was false. How many jumped in the markets based on a fundamental report and found themselves within 5-10 minutes scrambling to get out of such long acquired positions? If the FOMC cuts interest rates, what would the markets do versus what it should do? Who knows, because it could cause a bounce or a drop in the market. But I bet you ain't going to argue against 1 + 1 = 2, or argue that physics is not the variables behind gravitational forces. Bargain hunting near suspected lows is always favorable, and the bounce off of the SP 500 48.3504 level, or buying the video off of our projected third lower target level 86.62 seems reasonable. But is it the right thing to do? In our opinion, we're not in this camp, and time will just have to tell. It's easy to see the trees that make up the forest, and it's even easier to see the forest that's made up of trees, but it's not so easy to see behind the forest. Get your Ramo today. RJTICHARTS.com, driven by infinite wisdom and its proprietary trading systems.